Hey traders, I got some requests to do a crypto strategy video and here's one for scalping Ethereum. I analyzed how the price moves on this symbol and I think a breakout strategy will fit very well. So let's see. Okay, here are the basic rules of the strategy. I start on the 5-minute chart and see the trend if it is going up or down. I don't overthink it, I just zoom a little bit out and see the direction. Once I know that, I wait for a larger move and then the retracement in the opposite direction. For this retracement, I try to identify a pattern like a flag or a triangle. We will see this in the example in a moment. To enter the trade, I wait for a breakout of this pattern, but on a lower time frame, like 3 or even 1 minute. So let's go to the charts Ethereum, ETH USD 5 minutes. I zoom out a little bit and I think it's pretty clear to see that we are going down. So my bias is to go short with the direction of the trend. Now step 2, I want to see a larger move in the direction of the trend and then a retracement, a pullback to the upside, and for this we can identify a so-called flag or pennant, which is in this case a bearish continuation pattern. The principle is like that: you have a move to the downside, then the flag to the upside, and then you wait for the break to the downside again. But this break I want to see on a lower time frame. So I change now to the 3-minute time frame, or if you like you can even go to the 1 minute. Why to switch to the lower time frame? Because we want to see a candle breaking to the downside as a confirmation that the downtrend is to be continued. But the candle on the lower time frame, like this one, is strong, so it is a good confirmation. But when entering on a higher time frame, the candle would be too large already and we would lose too much of the move. As a second confirmation, I'm adding an exponential moving average, an EMA, with a length of 20. On the style tab, I increased the size of the line a bit so that we can see it better. And the confirmation is that the breaking candle has to be below this moving average. Okay, now without waiting for a retest, I just enter the trade here at the close of the candle. The stop loss I set somewhat about 20 to 30% of the flag's height. If you want to be more on the safe side, you can use the full height of the flag, but that's up to you. Okay, now for taking profit. I use another indicator called round number zones that is written by myself. With that you can spot round numbers on your chart as lines. You can define up to 3 symbols. For that you want to display the lines, so you can click here and change the symbol. I'm using ETH USD on Coinbase. I want to see a line every 10 steps, which can be modified here. And you can also define the line count, which means how many lines you want to see around the current price. I use these round number zones as levels where price could go to, but also bounce off from. So my first take profit I plan to this round number, which is 1960. I'm in replay mode so I can play out the trade. And you see we are reaching this level pretty fast. So if you say at this point, great, a good ratio of 1 to 1.6, I close the trade, nice profit. Alright, that is the easiest way to trade this. Another way is to move the stop loss at this level to break even or a bit better, so that we can't lose in this trade anymore. And then we put the take profit to the next round number and wait for this to be reached. If not, okay, then we don't lose money, we just win a little bit. But if price goes down to this level, we almost double the risk to reward ratio of this trade. So let's see what happens in this example. Now we are reaching the level and even more we are breaking it with a huge bearish candle that is reaching even the next level. So the profit depends on if you are sitting in front of your monitor and follow the trade, then you could make a profit to the close of the large red candle. But if you just move the stop loss and let the trade run, you end up with a 1 to 3 risk to reward ratio, which is pretty good. And you see this also perfectly lines up with the start of the flag, which is another way to define your take profit. I have another example, same symbol but going long. We have an uptrend on the 5-minute chart, a strong move to the upside, and then the retracement to the downside. Again I see a continuation pattern, a triangle, and a so-called build-up, a small consolidation zone that is building here at a round number zone. This is a level of support where price doesn't want to go lower. Another confirmation that we could break to the upside. So again, I switch to the 3 minutes time frame and wait for the break to the upside. I also enable the EMA again. And then we see the strong bullish candle without wicks breaking to the upside. So I enter the trade at the close of the candle, and the stop loss we can set to the support level, which is in my opinion tight enough. And again take profit to the next round number zone, and then I play out the trade. With this blue candle we are winning the trade, which is a ratio of 1 to 1.5, that's okay. So if this is your trading style, a short in and out, that's fine, you can just take the money, close the trade here. Or as before, we set stop loss to break even. When I set it to the previous swing low, this is a risk to reward of 1 to 0.28. But I play out the trade now and see if we are reaching the next zone. In this example, we can take the profit here, which is a risk to reward of 1 to 2.76. In these two examples, the trades worked out pretty nicely, but of course this is not all the time like that. But now let me show you how to take some profits even in a trade that actually doesn't work out that good. Same pattern, we have a move to the downside, then we see the flag and expect a break to the downside. Here's the breakout, the candle is large, but it is not a strong candle, for it has a pretty long wick at the bottom, which can be seen as a sign of weakness. So I wouldn't take the trade, but let's assume that we did anyway. So we are in the trade here at the close of the candle, and the take profit as before we set to the next round number zone. Okay, so we wait for price to come back to this level. And we are lucky it is reached with the next wick to the downside. So my recommendation here is to close the trade. Okay, take the money and go. But okay, you are greedy, you set the stop loss to break even and wait till price is perhaps reaching the next round number zone. And once more price is reaching the level, the third time it is rejecting to go lower. So we have 3 rejection wicks at this round number zone, at this support level. So I would close the trade, don't wait for price to come to break even, and just take the profits at this point. So price action gives you here great advice. And if you don't follow this, well, here's how this trade ends. So guys, this is what I wanted to show. I really hope you liked the video. If you do, then please don't forget to subscribe if you haven't already. I have to backtest these different kinds of trading, the pattern, and I will come back to you with the results. If you have any questions, add these to the comments below. The indicator that I use is linked in the description. See you soon on the trading guide.